Hi everyone, welcome back to my channel. I'm Carolina and today we are going to talk about something that can change your financial future: investing. I know many of you might have questions about when to start investing, how to get started, and whether it's really worth it. The truth is, the sooner you start investing, the better. And today I'm going to break down why that is, the difference between savings and investing, and how investing in the stock market and ETFs can be a game changer for your financial goals. So if you are ready to take your money to the next level, hit that like button, subscribe to my channel, and now we are ready to get into it. First things first, why should you start investing as early as possible? Most people think that investing is only for the wealthy or for those who are experienced in the managing money. But the truth is, anyone can invest, and the earlier you start, the better. Let's break it down. The power of time and compound interest. The most powerful tool in investing is time. Compound interest means you earn interest on your initial investments, but you also earn interest on the interest itself. So, the longer your money has to grow, the more it can snowball. So, for example, if you invest $100 per month from the age of 20 to 30, and another person invests the same amount from 30 to 40, the first person will have much more at the end of 40 years, even though they invested for 10 years less. This is because of the power of compounding. Time works in your favor. So the earlier you start, the less you need to invest. When you start investing early, you don't need to put it as much money to reach the same financial goals. You can invest small amounts over time and let compounding work its magic. So for example, let's say you want to save $1 million by the time you are 60. If you start investing at 25, you might only need to invest $300 per month. But if you wait until 35 to start, you might need to invest $500 per month to reach the same goal. So, starting early gives you a massive advantage. The earlier you start, the less you have to worry about playing catch up later on. Now, let's talk about the key difference between savings and investing, because they are often confused, but they are actually two very different things. So, saving is about putting your money in the safe place and not taking any risk. This might include putting your money in a savings account or a fixed deposit. The goal is to preserve the value of your money, but saving alone won't make you wealthy. It's ideal for short-term goals like building an emergency fund, saving for a vacation, or buying a car. But the biggest problem with the saving money is inflation. Inflation means the cost of living increases over time. If your money is just sitting in a savings account, it might be earning interest, but it's not growing fast enough to beat inflation. This means the value of your money is actually decreasing over time. Investing, on the other hand, is about growing your money over time. When you invest in the stock market, bonds, ETFs, or real estate, you are taking on some risk, but you are also giving yourself the chance to earn returns that outpace inflation. The potential of investing. Over the long term, the stock market has historically averaged a return of around 7 to 10% per year after inflation, depending on the market conditions. While there will be ups and downs, the key is that over time, investing has the potential to grow your money significantly, while saving can keep up. So, if you want to build wealth and achieve long-term financial goals, you have to move from just saving to investing. Now you might be wondering, how safe is it to invest in the stocks market or in something like an ETF? ETFs, exchange trade funds, that's the whole name, are one of the safest way for beginner investors to start investing, and here's why. Diversification. When you invest in an ETF, you are not just investing in one stock, you are investing in a collection of stocks. This diversification helps reduce risk because it spreads your investments across different sectors and companies. If one company in the ETF underperforms, the other can offset that loss. Low fees. The lower the fees, the more of your money is actually working for you rather than being eaten up by managing fees. Proven track record. Looking at historical data, many ETFs, especially ones that track broad indexes like the S&P, have provided consistent returns over time. While the stock market does go up and down, the long-term trend has been upward, and broad market ETFs have historically outperformed most other forms of investments in the long run. Less volatility for beginners. With an ETF, your exposure to risk is more balanced, which makes them an excellent option for new investors. So, example, the S&P 500 ETF has returned an average of 7 to 10% per year over the past few decades, showing that the long-term outlook for ETF investing has been very positive. ETFs provide a way to invest in the market while keeping things safer and more manageable. Now let's talk about one of the most powerful forces in investing, the compound effect. What is compound interest? Compound interest is when your money starts earning interest not only on your initial investments but also on the interest it's already earned. This is how wealth is built over time. So for example, let's say you invest 1,000 at an average return of 8% per year. After 1 year, you will have 1,080. In the second year, you will earn 8% on 1,080, not just 1,000. Over time, this compounding can result in exponential growth. The magic of starting early. The earlier you start investing, the more time you have to benefit from compound interest. And 1,000 in investments that earns 8% per year for 30 years could grow to over 10,000. But if you wait 10 years to start investing, that same 1,000 may only grow to around 4,500. The compound effect is truly where the magic happens, and it's why starting as early as possible is so important. So I want to know, have you ever started investing? What's been holding you back, or if you have already begun? Thank you so much for watching today. If you found this video helpful, make sure you're gonna hit that thumbs up button and subscribe to my channel for more personal finance tips. And just remember, the earlier you start investing, the more time your money has to grow, and investing in things like ETFs can help you achieve long-term financial freedom. So thank you so much, have a good day, and don't wait to start today and take control of your financial future. See you in the next video.